you have a 20th century economy running on a crippled system with defective assets. And then you have a digital opportunity where you can actually run on a digital capital that is 100% available, where the capital has a useful life of 10,000 years. You know, it works for anybody, right? It works for anybody at any stage in the hierarchy. There's nothing more valuable than knowing where an asset is going to be in 20 years.
There are increasing signs that Bitcoin's price could be on the verge of a significant surge, with some analysts predicting it could reach $66,000 by September. However, the cryptocurrency is facing strong resistance around the $61,700 mark, which may slow its progress. This resistance level has previously acted as a ceiling for Bitcoin, and whether it can break through remains uncertain. If Bitcoin does surpass this critical $61,700 threshold, it would mark a significant milestone in its upward trajectory. In a recent interview with Roman, prominent Bitcoin educator Michael Saylor shared his journey from initial skepticism to recognizing Bitcoin's transformative potential. Saylor discussed how Bitcoin could revolutionize capital markets by establishing a fair and stable financial system, replacing traditional assets with digital alternatives. He also emphasized that Bitcoin, as envisioned by Satoshi, represents a conservative, unchanging financial ledger that preserves value without energy loss. Saylor criticized the scientific foundations of traditional monetary economics, arguing that they often lead to speculative investment theories and corporate financing practices rather than solid solutions. Before we continue with the rest of the video, do check out Daily 5-Minute Crypto Newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
What I didn't have in 2013 is I didn't have a need for Bitcoin, and I didn't have a deep understanding of the technology, you know, and the ideology of Bitcoin. I just had the observation of a casual intellectual. What changed over the next 7 years is, I think, primarily I had a need for Bitcoin, right? I mean, the most important thing is to need something. I joke with people. I say Bitcoin is on a need-to-know basis. If you don't need to know, then you're not going to dig deeper. So the first thing that happened in 2020 was the COVID lockdowns, and bringing the entire world economy to a grinding halt will make you stop and take notice. And when the economy stopped, when the offices shut down, we had to embrace a lot of new ideas. So, for example, Zoom or remote meetings and the like, right? Things that I had rejected for the previous decade, all of a sudden I accepted in a couple of days because I had to.
They see Amazon and everything and say, hey, it's working. Why do we need Bitcoin? Or what do you think make them misunderstood Bitcoin so much?
If we step back and look at the big picture, I think the great majority of economists don't even understand money. And if you look at it, the only people that came close to understanding money are the Austrians, but the Austrians didn't have the internet, semiconductors, and cryptography. So the theoretical, perfect money is a shared, immutable, true ledger. Nobody in the history of the world created a shared, immutable, true ledger, right? The closest thing to something that was effective money was sort of maybe gold, or maybe sort of a credit system run by a philosopher king. But it's not until Satoshi develops Bitcoin that you actually have an example of a shared, immutable, true ledger system, or fair ledger system that's conservative. And by conservative, I mean like thermodynamically or physically conservative, like not leaking energy. So because we never had a proper money, then I don't think any classically trained economist could have developed an engineer, a physically grounded or mathematically grounded understanding of monetary economics. What happens next is, since they don't have a physically or scientifically grounded basis for monetary economics, then you don't really have a scientifically grounded basis for economics. And that means that everything that follows, which means corporate finance and investment theory, is also not scientifically grounded. So what you have is people, working to develop, call it a particular solution to a problem, but not the homogeneous solution to the problem. And the particular solution to the problem is a set of rough guidelines that work only for a certain amount of time, only subject to a certain set of assumptions.
As the crypto market continues to evolve, a significant increase in Bitcoin's value appears increasingly likely. Michael Saylor, a prominent advocate for the cryptocurrency, recently highlighted that while previous generations faced their own challenges, today's era of abundance presents unique opportunities. He believes Bitcoin is leading a revolution in capital markets, offering innovative solutions for preserving and growing wealth. Saylor argues that Bitcoin is transforming capital markets by serving as a reliable store of value and recommends leveraging low-interest loans to acquire assets like Bitcoin, which has shown a remarkable 500% annual growth. For those new to Bitcoin, Saylor advises dedicating 100 hours to learning about it before committing cash flows to investments. He also supports the idea of borrowing under the right conditions but cautions against using short-term strategies or excessive leverage. According to Saylor, purchasing Bitcoin with equity has the potential to generate substantial returns, making now a crucial time to consider investing. Let's return to the interview and watch more clips to gain further insights from Michael Saylor.
Throughout human history, the number one cause of death is you starve to death. We don't starve to death anymore. The number one cause of death today is metabolic disease. We eat ourselves to death, or we drink ourselves to death. So I think abundance creates its own problems. And with Bitcoin, what Bitcoin does is it's digital capital. So it reforms the capital markets, and it makes it possible to, instead of holding capital for 30 years, you could hold capital for 3,000 years. Okay, so it stretches out the duration of your capital instead of being able to oscillate the capital, at 10 vibrations per year. You could oscillate the capital at 100 megahertz, right? It's something much faster, right? We've got high frequency oscillation and we've got long duration economic longevity. But we haven't solved the issue of, how should we deal with entitlements? How should we deal with a disagreement over global warming? We disagree over foreign policy. If you're an individual family and you've got a bunch of real estate and you could borrow money in a government subsidized mortgage for 30 years for 3% interest, and that was the case in the US 2 years ago. If you could do that and you bought Bitcoin appreciating at 55% a year, it would be a pretty good idea to borrow €1 million or $1 million, pay 3% interest for the next 30 years, and then invest it in an asset that's going up faster than 3%, right? In fact, that's how you get rich. I mean, that's the number one way you get rich. You basically go levered, long, desirable property. Borrow $100 million to buy a $100 million building, and then let inflation drive up the value of the building to $200 million. And now you just made $100 million on $5 million of equity. How do you convert 5 million into 100 million? Well, you have to post 5 million of equity, lever it up with 100 million of debt, buy something that's going to appreciate in value. So that's what MicroStrategy's done. In essence, we just did it with digital real estate. I mean, the world's most desirable property is Bitcoin. And we did it before anybody else appreciated this dynamic. Obviously, I'm telling everybody. And some people will do it, but as they say, everybody gets Bitcoin at the price they deserve. And in order to appreciate Bitcoin as digital property, you have to put in the 100 hours in order to understand it. And then after you put in the 100 hours to figure out that it is desirable property in cyberspace, then it becomes very simple exercise. You buy it with the cash you have, you buy it with the cash flows you generate, and then you ask the question, can I borrow any money? And if you can borrow money, on terms where the note won't come due in less than 4 or 5 years, you're probably okay. If you're borrowing money mark to market, you don't want to take 10x mark to market leverage because that's impermanent capital. You might get wiped out on volatility. So short duration, capital, not a good idea, but a 10-year note, a 20-year note, a 30-year note, a 7-year note, not mark to market, that's a good idea. And then if you can raise capital via equity, if you were in Germany running a supermarket chain or a restaurant chain, and you could sell, and your chain's valued at 500 million euros, and you could sell 500 million euros of equity, and then buy Bitcoin with it, then your supermarket's probably growing 3% or 4% a year. The Bitcoin's growing 20 to 40% a year. It's just like doing an acquisition of a digital monopoly growing 20 to 40% a year forever.
Bitcoin's recent accumulation trend has drawn the attention of analysts. According to Glassnode's accumulation trend score, Bitcoin holders significantly increased their purchases last month, signaling growing confidence in the market. The score, which uses a heat map to analyze market activity across different Bitcoin holder cohorts, provides valuable insights into market sentiment and trends. Notably, nearly 25% of all Bitcoin was acquired within the $58,000 to $73,000 price range, indicating strong demand. With an estimated $300 billion worth of Bitcoin bought in this range, the market seems poised for a potential price increase. Technical analyst Tian of Crypto notes that Bitcoin has historically closed higher than the halving price in the fourth month following a halving event. If this pattern holds, Bitcoin could peak at $66,000 in September. This forecast is supported by previous post-halving chart patterns, which have proven to be reliable indicators. Meanwhile, another respected analyst, Wedge Capital, observes that Bitcoin is currently consolidating between the wedge highs seen in late June and early July, which are now acting as support. This consolidation phase leaves the market in suspense, as it could signal an impending move in either direction. As Bitcoin progresses, do you think its key advantages over traditional monetary systems suggest a likely price increase? How might this shape the future of finance? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.